All right. So a very quick update on the trade idea. AMD got very close to the price target today, so a lot of us did lock profits, but if you did not lock profits, this is still a trade likely going to 188. And if you did lock the profits, it is completely fine to continue to add back on dips until we get to 188. Just keep in mind, you always need to manage your risk. So if you are adding up here, you need to remember that the risk level was down here near the low 170s, and you still need to manage risk according to the risk level. So you'll need to calculate the risk reward the higher we go. And if the reward is no longer worth that risk, then you need to start moving on from the trade and looking for a new one. Keep in mind, the trades like the Intel trade and the AMD trade are very common in the Discord server. We have an extremely high win rate right now. Today was nearly 100%. The only trade I don't think actually made us money today was an early entry into Bitcoin, but that's a longer term swing trade anyway. So if you want access to more of my trade ideas, that is in my Discord server, which you can find out how to join in the link in the description of this video. All right, so now we'll jump over to SPY, and today we were up nearly 1%, and I still don't feel like talking, but a lot needs to be said. So this will probably still be a lengthy video, but if you appreciate this extra information, please let me know by smashing that like button. I'm trying to help all of you, which includes the trolls that are telling me that I'm way too bullish, but the market just continues to go higher. So is it really me that's too bullish, or is it the market bullish and I'm just giving you accurate technical analysis? Yeah, let that one sink in. So when we look at SPY, there is nothing on this chart that tells us we are not still in a bull trend. It is actually the exact opposite. And yes, we are going high very quickly, but that is exactly what strong bull markets do. As I always tell you, you do not short strength, you do not try to call tops, and you do not just try to guess when it's time to short. You need something that gives you some type of edge or some type of way to manage a trade, and just simply thinking we're at a top because you think we're too high, or you think we're overvalued, or somebody on a news article told you the market is going through a 10% correction, or it's just the direction the wind is blowing that day that's making you feel some type of way. That is not how you trade price action. This is a bull trend until it's not, and a lot of you are really starting to understand this, which makes it worth my time to keep explaining it, because a lot of you are new to my channel and are learning this stuff. And even if you aren't new to my channel, at this point, if you're still following me, you're starting to recognize that this stuff is not easy to learn initially, but once you understand it, it becomes a lot simpler. So stick with it. Following price action is the best way to trade. Go look at all of those bears that have been getting the market wrong for the last 2 years, who use all of these technical indicators and tell you all of these reasons their technical indicators are predicting a crash, or their technical indicators are predicting a top, or their technical indicators can tell you how much we're going to pull back or how much we're going to correct. It is all total BS. They've all had to revise all of their predictions and all of their bull crap. Everything they've told you was wrong. They've completely sidelined a lot of retail investors who thought they knew what they were doing, who believed what they were saying, and either sold out of their long positions, or even worse, shorted one of the strongest bull markets in history. And if you don't believe me, I just talked about this in the Discord server, this bull market is now starting to rival the 2020 rally that we had after the crash. And if you don't believe me, go check it for yourself. So yes, these people are causing damage to retail investors and retail traders, and they do not know what the hell they're talking about, which is why I constantly call out their BS, because they constantly tell you they think they can call tops and how deep we're going to correct. Go back to that Peter Lynch quote that I told you, that far more money is lost trying to plan for corrections or predict corrections than is actually lost in the correction itself. Peter Lynch is not somebody I would reference if I didn't agree with what he is telling you, because it is very true. So block out all of the noise and understand that we are price action traders that do not care about being right. Those people trying to call tops are trying to stroke their ego one day when they're finally right, and they're going to say, I told you so. But they've been calling for that top for over 2 years now. So by the time they call it, I'll be surprised if they even have $1 left in their trading account. Or even worse, they're giving you that technical analysis and they're not actually trading it themselves. If you are in any of my services, you know I trade everything I tell you. And you know I am not BSing you on anything I'm telling you. There are going to be days where I say something and it doesn't work out, which is why we are always prepared for both scenarios. So remember when I told you I didn't feel like talking, but this was going to be a lengthy episode anyway? We haven't even started talking about the levels yet, but all of this stuff that I'm talking about is very important for you to understand. And I even did a video on this called the AI bubble, and that video was months ago by now, and we are still going higher, and it is looking more and more likely that what I said in that video is starting to play out. So if you have not watched that video, I do believe it is very beneficial to watch, and I do think you should continue to come back to that video to remind you what is possible in this market. So I'm going to leave it there as far as the lessons. These topics are very important to understand because when you are following price action, you cannot have a bias. The moment you start having a bias, you are no longer following price action, even if you think you are, because the definition of following price action is letting the chart do all of the talking. And there is nothing on this chart that tells us this is no longer a bull trend, which means even if we get pullbacks and even if we get a correction, it is still going to be a buying opportunity before we go even higher. Let all of that sink in and really understand the things that I'm telling you, because they are going to be important to understand for the rest of this trading year. So very quickly here, when we look at SPY, you can see we blasted through all of these price targets, which is why I told you it's a bull trend until it's not. And the next price target above 561, if we continue to go higher, is going to be right around 564. If we get a pullback at this point, we could still come all the way back down to yesterday's close and still find support at 556, which is why it is so difficult trying to predict a top, because even if we get a pullback now to yesterday's close, anybody who shorted yesterday is still underwater, and then we can just continue to go higher to 564, and those bears are still trapped and still going to get squeezed as we go to higher prices. So understand it is a bull trend until it's not is not just something that I say, and the trend is your friend is not just something that I say. This is factual information based on following price. This is a bull trend until it's not, meaning we are going higher until we're not. And when we're not going higher, that means we're going to see it on the chart and we're going to be able to react accordingly. So as long as SPY can stay above about 554 to 556, I see no reason we can't go higher. And if we break down below those supports, then get risk off, because we're likely going to 548, and it's as simple as that. In the NASDAQ 100 triple Qs, we were up 1.04% today. And again, bull trend until it's not, going higher. We hit the price target at 503. Above that, we go to 507, 511, and then 517. We have support down here right around 497. If we break that, we have support right around 493. And below that, we likely get risk off until we get to 485. It's a bull trend until it's not, meaning we're going higher until we're not. And we're still in a very powerful bull trend. So do not bother trying to call a top. Even if you are shorting in this market, that is completely fine. There's nothing wrong with shorting, especially for a day trade, but just don't expect to see a crash or a major drop. You should be locking in those profits as soon as we get to a support zone, or realizing a tiny loss if we break through a resistance. It's very simple to follow price action, but it's very difficult if you have a bias. On the Dow Jones, we were up 1.1% today, and this is what I told you the last 2 nights in a row doing technical analysis, that I was extremely bullish in the Dow Jones, and I told you I think it's going to an all-time high. And today we had an extremely bullish candle on increasing volume on a bull breakout with a bull trend breaking through resistance, and it looks like we are well on our way towards this arrow at 402, and we have CPI data and PPI data for the rest of the week, which is just going to be an excuse for high volume trading. There is nothing coming in that inflation data that is going to influence anything, because the Fed is already set in their ways that they're going to pause rates here until we get some kind of weakness or some kind of economic slowdown. So block out the noise and follow the chart, and right now the chart in the Dow Jones says we are well on our way towards 402 while we're above 394. Stable above 394, it does not get any simpler than that. On the Russell 2000 IWM ETF, we were up 0.98% today, and we did get the bull breakout above the resistance trend line, but we did not get the bull breakout above this resistance just above 203, but that could happen as soon as tomorrow, and you can see the volume did tick up today on this bull breakout, and we're above all the moving averages. This is extremely bullish if we start to close above 203 to 204. Because that means we're likely going straight to 214 and then into the 220s. Again, this is building up a bull trend. If you do not think so, then you could simply wait for the bull breakout. But we have been accumulating this for a while now in the high 190s and then more so here in the low 200s. And now we are starting to get those profits, and this is the time to let the trade work for you and not just panic sell for break even or small profits. Let this thing run if it's going to run, and we're looking better and better as we get more and more price action here. On the ARKK ETF, we were down 0.22% today, and it's still looking more risk on above 45, so there's nothing that says we can't go higher here. It does look like a higher low into a higher high. And the best risk level that I like here, if you are going to trade this, which I don't suggest trading this, I like it for risk on sentiment and nothing more, is going to be this risk level down here at 44.8. If we break below that, it's still a bear trend and we're still going lower. On the VIX, we were up 2.72% today, and this is likely just due to some hedging, which I told you while the VIX was low, you could get some cheap hedges. And we are going into CPI and PPI data, so there's no doubt some people added some cheap hedges. And that's just insurance in case there is a storm, you're covered. 1 put per 100 shares, yada, yada, yada. Cheap insurance. If we go lower, you're covered. But this doesn't mean anything unless I see the VIX getting out here above 15, because we need to see real fear and high volume panic selling to send this market lower. And right now, the VIX is just way too low to see high volume panic selling. On Bitcoin, we are currently trading just below 58,000, and I do think this could be a bear trap. I could be wrong about this. I have to acknowledge this is definitely a bear trend, and this is definitely giving all of the signals that we could be going lower. But I cannot rule out the fact that this could be a quick bear trap here to look like we're going lower down towards 53,000. And then just start ripping faces higher and clear right through 60,000 with one swift motion, and then off to the races for a pretty powerful bull rally. Now again, that is just a speculation. I need to see price above 58,000, and even though we were above it today, as you can tell, it is a rejection and we did not close above it. But above 58,000, I think Bitcoin has to be full bull, and I am going to keep it as simple as that. On Nvidia stock, we were up 2.69% today, and we are now starting to break above 134, which is invalidating some of the bear scenarios that I gave you of the lower high rejection. So if we continue to see follow through here and we continue to hold above 134, it is very likely Nvidia is trying to make another new all-time high, which is going to take us right around 150. Keep that in mind. 134 is a very good level above or below it. And right now we are above it. On Tesla stock, we were up 0.35% today, and we're still struggling around that resistance right around 264 to 265. But if we do break above it, we are likely going to squeeze straight to 274 and then 289. You can stay long above 255. If we break below 255, I think you should lock some profits because we could come all the way back down towards 230. On Apple stock, we were up 1.88% today, and we did hit the price target at 230, and we actually exceeded it. And as I've continued to tell you, this is really just bullish above 218. I'm not putting any limits on how high anything can go in a bull trend. So right now, you can just stay bullish above the rising 5 EMA on the daily chart or above 218, but I would be locking some profits as we're going higher because nobody ever went broke locking profits. So jumping back over to the S&P 500, remember what I told you about CPI and PPI? Those are just likely events that are going to bring in volume. There is nothing in this inflation data that is going to change the course of the Federal Reserve and how they are handling rates. That's okay if you don't agree with me. That's why they're opinions, but I have been right more than I've been wrong, and I have been very bullish for the last 2 years. And you cannot deny the fact that I have a track record and that my track record is pretty damn good. So maybe, just maybe, I know what I'm talking about. So follow price. That is what I continue to try to hammer home to you is price is on the chart. We follow the chart. We don't care about anything anybody says, which includes my speculations. Because even my speculations, I wait for price action to confirm them. So if I draw an arrow on a chart, I don't just blindly go load up on positions in that direction of that arrow. I allow the chart to unfold and the price action to do all the talking. If you start to understand what I mean by letting the price do all of the talking, the way I trade, the way I talk about technical analysis, and the way I try to help you build trade plans is going to make a lot more sense. This is not me being bullish and trying to be correct. This is the market being bullish and me reading the charts to you. If you understand that, then you are going to understand that it is not me sending the market higher. It is me telling you the market is likely going higher, and then the market does that because that was the direction it was already telling you it was going to go from the chart. So let the damn price action do all the talking, block out all of the perma bears. There will be a day where this market tops, and there will be a day where we start to pull back, and there will be a day where we get a correction, and we will be there to read the price action and react to it accordingly, and we will still crush this damn market. So if you want to come crush this market with us, you can get access to all of my trade ideas, my technical analysis, and my intraday updates by joining my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. With all of this volatility in the market right now is a great time to be in the Discord server because there are a ton of trade ideas flowing in daily. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.